Alright, so earlier this week I made the video revealing my entire value paper trading portfolio. If you're new to the channel and don't know what I'm talking about, go check out the video. Essentially, I'm doing a paper trading competition / little portfolio series. I picked 10 stocks that are intrinsically undervalued, that are alright quality, they're not the best, but they're really appealing value and really appealing deals right now in the market that a lot of people seem to be eating up. This is more traditionally Warren Buffett style investing of finding companies at, much lower valuations and more quote-unquote value investing. But the portfolio that I'm going to be sharing today, I essentially picked the highest growth stocks that I could find with the highest PE ratios. These are typically companies that are very solid quality but trade at a really high premium. So this is going to be a little experiment / competition that's going to be on the channel for a while. This is going to be a 5-10 year kind of thing, and I'm going to continuously update throughout the channel's history. So make sure to subscribe and turn on post notifications, and I'll be updating that probably every month. And if you haven't already, check out the Do Dividend Stocks Not Drugs merchandise. It is the best Christmas gift you can get for any dividend investor in the family or investor in general. We have a big Black Friday sale coming up soon, so again, make sure to keep an eye on the community post for that. And of course, with all that out of the way, roll the intro.
Hello, I like money.
Alright, for this portfolio, we're going to be using it on DividendData.com. DividendData.com is the sponsor of today's video as well. If you want to help me out, something new, there's a referral code linked in the description. I get a decent chunk of that money if you use that code. So if you're interested in stuff like this, track your portfolio, research new stocks, all that good stuff, the link will be in the description. But we went full out Joseph Carlson for this. We forgot what valuation was when we bought a lot of high growers. So essentially, with the rules of this portfolio challenge that I'm doing, I do 10 stocks, I put $1,000 into each of them, and I'm just not touching it. Now, I don't know if I'm going to be doing a monthly or yearly transaction or whatever. I'm still going to kind of let the community in the Discord, link in the description, kind of vote on that. But as for now, I'm just not touching it. I tried to find the highest PE and the highest valued stocks, and the stocks that are really considered to be having a quote-unquote premium around them, rather for their high-quality business, the type of, fundamentals that they have as a company, whether it just be their brand itself, etc. Their first company is a Joseph Carlson special, which is, of course, Intuit, stock ticker INTU. Intuit is a top player when it comes to taxes. A lot of people have a negative concept when it comes to tax companies. Oh, they're bad, they're evil, the U.S. is going to run them out. I don't think that's going to happen, guys. I think Intuit's a pretty strong company. For me in my own portfolio, I haven't really bought it. I haven't done a whole lot of research on it itself. All I know is that it's a really high valuation company. It has very strong fundamentals. Financially, it looks great as a company. And overall, it's just one of those Joseph Carlson-esque companies. But in all seriousness, Intuit is a very strong business overall. I do like their business model a lot. I do like the fact that, taxes are very reoccurring when it comes to the revenue, and that's what's really appealing for me personally if I ever were to look deeper into Intuit. So Intuit's the first holding. Next, we have S&P Global, another Joseph Carlson special. There's going to be a common theme in here, guys. I'll let your own brains do the work here. But S&P Global is an amazing business overall, and it's one that I actually have recently bought into in my portfolio. It's even climbed up to $403 per share. Now, I like that a lot. The world is always going to need data, and the world is always going to have market indices, which S&P Global is covered. They're a very well diversified business that is, in any economy, is going to be needed. S&P Global is always knacked for its high valuation and the premium that it trades at simply because of its business model. But overall, with my recent purchase of it, I'm already up almost $50 or 8% of my purchase, so right now it's looking pretty good. Speaking of another high-quality company that trades at a crazy premium all the time, next we have Costco. Costco is always knacked for its valuation, and that's what holds a lot of investors back from buying in. But when I bought my Costco, I kind of realized the same thing, but at the same time, you look historically, this is a company that always trades at a premium. I bought my first Costco shares at $525 this summer, and now they're at $590. I wish I would have bought more, I'll be honest, but I do think we are in a little bit of a bubble when it comes to them. But Costco is definitely a no-brainer when adding to this portfolio. It's an amazing grower. I love how their business is structured. They offer an amazing product to their customers. They have pricing power with their membership. Costco definitely trades at a premium though, and I think that's like the one negative thing that the stock's really knacked on. So I added it to the portfolio for sure. Alright, well, we're on the topic of stocks that have been riling up recently. Next we have Amazon, stock ticker AMZN. Amazon could rule the world one day, I'll be completely honest. With that said though, I had to put them in the portfolio. Currently, they're trading at $145.80. They're a high grower. Their AWS business is insane. Amazon was definitely a no-brainer. I think they built up a lot of brand value recently. I think it's a very strong business. Yes, it's very funny to joke that they're not profitable or they don't have free cash flow or whatever, but they're making so much capital expenditures that will quite literally pay dividends in the future. So Amazon's a very strong company, and I think long-term it could be an amazing hold. Next, we have Visa. Visa is probably my favorite company in the world right now. I understand its business, probably the best out of any company in my portfolio right now. They have such great pricing power. They're in a duopoly with MasterCard. But once again, Visa is a company that many investors have avoided for a long time due to its high valuation. People are saying that at $215, and currently it's at $246. Visa has an amazing share repurchase program and actually just re-hiked that dividend over 15%. Visa is a free cash flow machine, and I probably want to have it as a top holding in my portfolio personally. Right now, it's a top holding, but I think I still have a lot more room to add to it. So, with me and my personal portfolio right now, I'm adding to Visa at $230 to $235 and below. Will that happen again? I don't know, but I am being really patient right now with my own capital. But Visa was definitely a no-brainer for this portfolio. It was between Visa and MasterCard, and I like Visa better than MasterCard just because of the higher network that they have right now. MasterCard, the only noticeable difference really is the higher return on capital employed, so I went with Visa on this one. Next, we have Apple. Apple is an amazing business, no matter which way you look at it. Yes, they don't have the highest growing dividend or whatever, but their share repurchase program is insane. Currently, they're trading at $187.44. The Apple ecosystem and the Apple business model, I think, is one of the most unique and impressive things that I've ever seen in my life. Apple has such an amazing quality product as well. I have an iPad myself, even though it's broken. I have an iPhone. I'm recording this video on an iMac. I have AirPods. I have so much stuff that I use with Apple every day, and it's not because I'm a shareholder or a part owner. Wink, wink. Unfortunately, Apple is one of the most common stocks amongst retail investors, and everybody's been wanting a piece of Apple. Me personally, Apple actually got really close to where I would like to buy it at, but it didn't get right there. Warren Buffett was buying Apple at 150 a few years ago, and I think 150, 160, and even 170 is a good buy for me. I own Apple a lot in my portfolio right now, and I have a decent holding already, so it would have to get down a little more for me to buy. It didn't hit there, so I'm not going to shoot myself in the foot over it, but a little unfortunate that it's traded up after then. But Apple's just an amazing business, but once again, always knacked for having that high PE, high premium. Alright, next is a company that I don't own, but I actually do own one of their competitors, which is Netflix, stock ticker NFLX. Now, I own Disney in my personal portfolio, which I am a little regretting right now. With that said, though, me personally as a consumer, I prefer Netflix even more. I think Netflix has a very strong content library. I love the way that they're expanding into new markets right now, but I don't own it in my own portfolio just because I think there are better opportunities out there and the fact that I already do own Disney right now. So it would kind of contradict itself. I like Netflix a lot as a business. I think they are making some pretty strong in-house content as well, and I think they have some solid potential with that in the future. I like that they're pretty much the only streaming company that's actually making free cash flow right now. Well, technically Disney is now, but they were pretty much the only streaming company to making free cash flow, which I think is a positive. I think they have a lot of potential also with sports in the future, and that's going to be something to keep their eye on. Netflix does trade at a pretty big premium right now, though, so in my portfolio, I'm not really looking to add to it, again, as I do own Disney. Next, we have Waste Management, stock ticker WM. Waste Management is always trading at a premium. They're one of the most popular quote-unquote recession-proof stocks amongst retail investors, and there's always going to be a premium on it for that. With that said, though, I was buying Waste Management in the 150s a few weeks ago, and now it's at $172.14, so it's nice to see a little bit of short-term gains. I think Waste Management is going to be one of the most sustainable companies in the world. No, it's not going to have the crazy growth that you'll see from a company like Visa or Microsoft, but I think it's going to have solid, sustained growth, which is a long-term growth investor, I think is going to be very important. So I own Waste Management in my personal portfolio, and I put it in this one as well. And it kind of stabilizes things, gave it kind of that recession-proof company that some of these may not be considered, but I'm very happy to have it in here. And of course, it does trade at a pretty big premium, which is a common theme amongst these companies. Next, we have my favorite company in the world, which is Microsoft, stock ticker MSFT. Unfortunately, Microsoft has gone up like wild recently. There's something called AI, and apparently that's helping the stock. I don't know.
Oi lad, gotta keep you honest, buy the Do Dividend Stocks Not Drugs merchandise that I bought, and it's called Soccer Not Football, link in description.
I was invested in Microsoft before the whole ChatGPT thing had happened and the $10 billion investment that they made in that, and unfortunately the stock has taken off since then. I loved Microsoft as a business before ChatGPT, but looking at what they're doing now potentially with it could result in some serious growth for them in the future. Microsoft is my current largest holding in my portfolio. I was buying the stock at $240 and $230 just a year ago. It's crazy how fast things can change in a year. Unfortunately, it's trading at $370 now. Now, this stock also was trading near $320 just a month ago, and a lot of people were hammering that buy button. I wasn't though. I was staying way more picky. It's always been the number one holding in my portfolio. I have a lot of gains that are on it already. I would have added below 300 though at a fair price in my opinion for my situation. But Microsoft's an amazing company, but right now over 350, I do think they're a little overvalued, especially with this little AI run that they've had. And lastly, of course, I had to put Nike in there, stock ticker NKE. Nike is a very strong business with one of the strongest brands in the entire world. Anytime you have a business that can sell a $20 shoe, put their logo on it, and sell it for $250 and it will sell out instantly, I want to be a part of that. Now, Nike always does trade at a premium because of the brand. Everybody and most retail investors are familiar with the Nike brand, but it's an amazing business at the end of the day, and they have a backbone brand. Fashion trends come and go, but Nike always stays. That's something I've noticed in my lifetime so far, and it's really amazing to see what the Nike brand can do. With that said, though, Nike does always trade at a premium, and unfortunately, I didn't realize it when I bought my first share at $140. Today, I recently have actually bought to it a few weeks ago at $90, and I thought that was a really good price for it. Unfortunately, I didn't load up more, now it's trading near 105. And that is the entire growth portfolio revealed. Let me know your thoughts on it. Did I miss any stocks? Do you think any stocks that I put in it are bad? Let me know in the comment section. At the end of the day, this is going to be a really fun experiment. I want to give credit to Guff on the Discord for kind of recommending it. I think it's going to be really something fun and unique that I don't see a lot of other YouTubers doing. So I'm probably going to provide monthly updates just on the portfolio value, the biggest gainers, losers. I'll probably do it my own personal portfolio updates. As if you guys know, I do that every month at the beginning. I want to thank you all so much for watching. Check out the Do Dividend Stocks Not Drugs merchandise if you haven't already. And of course, don't forget Do Dividend Stocks Not Drugs. Have a good one.